Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
Before the Fed announced its monetary policy, the U.S. continuously released inflation data higher than expected. The prospect of U.S. rate hikes has pushed one of the indicators measuring the U.S. dollar trade-weighted index, the U.S. dollar exchange rate, to a high of 106.51 for the year. Subsequently, pressure from the decline in U.S. Treasury yields after the Federal Reserve's monetary policy decision caused the index-measured U.S. dollar to fall yesterday. Against this backdrop, despite rising inflation risks, the Federal Reserve has kept borrowing costs unchanged in the current range of 5.25% to 5.50% and has retained its previous forward guidance. Gold continued its daily decline, falling below $2,290 in the latter half of Thursday. After the U.S. data release, the benchmark 10-year U.S. Treasury yield erased its daily losses, causing gold prices to decline before the release of U.S. employment data on Friday. Market demand for the U.S. dollar slowed down ahead of disappointing data from the U.S. and the announcement of monetary policy by the Federal Reserve, prompting investors to return to gold. Gold prices regained the $2,300 level and traded slightly below the daily high of $2,330. The Federal Reserve kept its policy rate unchanged, and Powell stated at the press conference that the possibility of future rate hikes is slim. Midweek, oil prices fell by about 3% to a 7-week low due to unexpected increases in U.S. crude inventories, hopes for a ceasefire agreement in the Middle East, and diminishing hopes that recent U.S. interest rate cuts could boost oil demand. U.S. crude oil prices declined. The U.S. EIA reported that energy companies unexpectedly added 7.3 million barrels of crude oil inventories in the week ending April 26. In contrast, Reuters surveys showed analysts predicting a decrease of 1.1 million barrels in inventories, while data from the API showed a 4.9 million barrel increase in crude oil inventories last week.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news and